Hi, if you are a homeowner getting ready to face foreclosure, this video is just for you. Today, we're going to talk about short sales. Hi, let's face it, it has been a rough few years for some of us, especially homeowners, with the pandemic and the lockdowns and shortage of work and pay. Everything has been going on. Nobody has escaped the wrath of the past 2 years, so to speak. So today I want to talk to homeowners that may be facing foreclosure or know that they have a significant amount of consecutive late payments, and you have made the decision that you don't want to be in a property anymore, but may not know about the short sale process. And I want to help you with that today to get you to understand that there is something else you can do besides face foreclosure. One reason why you don't want foreclosure on you to happen is because of the negative impact it will have on your credit report. When a foreclosure hits your credit report, your score not only drops down at least at minimum 50 to 75 points, but it also damages your record for the next several years to come. Your history, it will sit there on your history, bring down your score, and it also says to anybody else that you would apply for credit that you are unworthy of being loaned a large sum of money. So instead of facing a foreclosure, let's talk a little bit about a short sale. Short sales can be a confusing process, but with the right professional helping you out, such as a real estate agent, it doesn't have to be. And why did I say such as a real estate agent? Because pandemic or not, market crash or not, honestly, this is something that we typically have to handle not on a weekly basis, but we have handled them before and we pretty much know the process. And so, what better way is there for you to handle or go through such a sensitive and emotional time than with someone that is very familiar with the process and the way how things go? And that is your trusted real estate advisor. So let's talk a little bit about the short sale process. When a lender approves a short sale, they are agreeing to sell a property for less than the outstanding mortgage balance against it. Lenders will generally only approve a short sale when foreclosure appears to be inevitable. With a short sale, the lender doesn't have to take the property back and bear the expenses of maintaining it until it can be sold. They'll also avoid risking that the property won't sell again at the price high enough to recoup their losses, as it is more than likely would be in a foreclosure. Foreclosure auction sales are generally much lower than the market value of a property. A short sale is a chance for the lender to receive more than it would have in a foreclosure, but they are not going to want to release any mortgage obligations at rock bottom prices. So, yes, a short sale is in the lender's favor more than you, the seller. But it benefits you too, because if the property sells in a short sale, the lender gets what will satisfy them, and you as the homeowner will not have the foreclosure on your credit report. Let's talk a little bit more about your process in this situation. You have to submit a bank package, and here is what that bank package consists of. It's very similar to the package that you have already submitted when you applied to get the loan in the first place. Here are a couple of points. A seller's short sale package will mostly consist of a letter of authorization for your agent to speak with a bank, a preliminary closing statement, a completed financial statement or request for mortgage assistance, which is also called a RMA, a hardship letter, tax returns from the previous 2 years, W-2s for the previous 2 years, payroll stubs for the last 30 days, 2 months of bank statements, and a comparative market analysis or list of recent comparable home sales in the area, which you'll typically get from me, your real estate agent. So a seller's package is really close to applying for the mortgage. Most of the same information, except for this time, you're showing documentation of why you have defaulted in the mortgage. And this is also a big sign of integrity on your part. Life happened and you don't want it to jeopardize you or the financial institution that gave you the loan. So this is a very, very responsible way to handle your property facing foreclosure. Now let's look to see what the bank might do. The typical process for the bank is this. They acknowledge receipt of the file. This can take longer than 10 days. Sometimes it's a month or more. A negotiator is assigned, which might take up to 30 days. A broker price option, a BPO, is ordered, where a broker generates an educated opinion on the value of the home. A second negotiator may be assigned, taking an additional 30 days. The file is sent for review based on the pooling and services agreement. This can also take up to 30 days. The bank might then request that all parties sign an arm's length affidavit, which is a document signed by the buyer and seller stating that neither party knows the other, nor is there any type of pre-existing relationship between the two. The bank will then issue a short sale approval letter if the sale is approved. So if you are a homeowner and you are getting ready to face foreclosure, it is important that you contact a local real estate agent that can help you through the process. It is an emotional process. It is a taxing process on your self-esteem. So don't do it alone. I implore you not to do it alone. If you want more information or just need a 30-minute consultation from me, I have the links down below in the description. And I hope this video has helped you. Don't forget to hit the subscribe button. Don't forget to hit the like button. And again, my name is Belinda Robertson, and I will see you later. Love you guys. Bye-bye.